It is time to check in with the deal desk. Our good friend Iyan Adewuya right beside me here in the newsroom. He is Bloomberg senior M&A analyst. He's been looking at Goldman Sachs and the M&A league tables. Iyan, always good to see you. So
Morning.
Goldman jumped yet again, making headlines. They went from number 3 to number 1. Is that right?
Absolutely. The last time we checked, they were mired in number 3. We were talking about this at the end of the first quarter and how probably their M&A franchise was affected. Well, lo and behold, here they come roaring back, moving up 2 spots. And the way they did it was by advising on a stunning...
Give us just a quick recap of the time preference. Is this over the quarter?
Yes, and so if you look at month to date, they advised on 14 deals, $50 billion, and that's how they came roaring back. And so right now they're sitting on number 1, and you have a few surprises as well, like Credit Suisse that roared to number 3, even though that they've advised on a lesser deals than Goldman and Morgan, who are in 1 and 2, but they've really advised on...
Yeah, we just saw that chart of the ranking, so I guess it's sort of there it is. Well, not again, but JP Morgan and Morgan Stanley, a bad day anyway for them, I guess, right?
Yeah, and there are some advisors that are having a very good month here, and the theme really is mega deals. When you have Goldman that has advised on 2 mega deals this month alone, 4 of the 9 mega deals that have been announced this year, then it really climbs you up in the rankings. And so, you know, we look at this stuff as inside baseball because, you know, they care about it.
$50 billion is certainly
$50 billion in
some worth noting.
Absolutely, in a single month.
In a single month. Now, total amount of cross-border deals that we have seen, where does this $50 billion fit in?
Well, cross-border deals have been pretty significant this year. You've had $480 billion worth of cross-border deals announced this year. Pretty significant sum when you then analyze the fact that 51% of all our deals announced globally year to date include a cross-border component. And so last year it was about 49%. The year before it was just about 40%. Cross-border deals are a significant driver of the merger markets as they are today. And that's because you have the usual suspects. Whenever you have rising merger markets where you have significant amounts of cash, access to financing, CEO confidence, but you also have industry and company-specific drivers where you have industries that have low organic growth prospects and high cash balances. It really infuses the merger markets as we're seeing today. So it's a bit of a sweet spot we're seeing right now.
So that's, you named some of the reasons why this is happening. When you reach out to people, do they expect it to continue?
Absolutely. I think some of the numbers we're going to be seeing in the second half of the year, frankly, between you and me, are going to be nutty. So far this year, you have close to $1 trillion worth of deals already, almost 10,000 deals. We're not even half of the year yet. So when you look at the back half of the year, if this current climate continues, where you're in a bit of this sweet spot between access to financing, a good trajectory in the global economic markets, it's a pretty sweet spot.
$480 billion again. Worth noting. Iyan, thank you so much. Iyan Adewuya joining us there, Bloomberg senior M&A analyst joining us on the deal desk.